Welcome to Ajay's Plain Money. The Indian stock market witnessed a dramatic tale of two narratives today. One is the Adani Group, where its stock soared on the regulatory relief, and the second one is the technological giant declined under the way of unexpected US visa policy changes. The market ended Monday's session in the red territory, marking the second consecutive day of decline as the investor grappled with the mixed signal from the domestic and the international fronts. Where the domestic is the SEBI clean sheet to Adani and the international front is the H-1B visa fee shock. Let's look into the key market highlight for today. Sensex closed down by 0.56% and the Nifty dropped by 0.49%. Rupee weakened to 88.32 per dollar and the gold surged by 1.49%. Next we will look into the positive news. Today on the positive news we have three things to discuss. One is the SEBI clearance sparks the Adani Group, and the second is the GST rate cut boost a consumer, and the third is the metal and the energy sector shows a resilience. First we will look into the SEBI clearance sparks the Adani Group Rally. The SEBI dismissed all allegations made by the Hindenburg research against the Adani Group, concluding there was no evidence of stock manipulation, the related party misuse. This regulatory relief triggered a massive buying interest across the Adani company. The clearance covers a major allegation including insider trading, market manipulation and the violation of the public shareholding norms that had plagued the group since January 2023. Related stock which outperformed by this news are all Adani related stocks, and the top performer for today is Adani Power, which gained by 20%, and the second is the Adani Total Gas, which gained by 17.5%, and the third is the Adani Green Energy, gained by 8.12%, and the Adani Energy Solution gained by 5.67%, and the Adani Enterprise up by 4%, and at last it's the Adani Port which also increased by 2%. And the reason why these stocks rose are not just by the SEBI clearance. The Morgan Stanley initiated a coverage on the Adani Power with an overweight rating, and the target price is 818 rupees. The brokerage expects the company's capacity to expand to 41.9 gigawatt by financial year 32. Next on the positive news, we look into the GST rate cut which boosts the consumer sentiments. The new GST rationalization came into effect from today with a significant cut across the consumer's good category, and we already saw there is no more 28% or a 12%, and all goods and services will be charged either 5 or 18%, and there is no tax for the insurance, and for the luxury product and for the luxury and other sin products like tobacco, the topmost tax rate is 40%. The GST reform are expected to lower the inflation by nearly 35 basis points within months, similar to the 2019 cut. The October CPI could fall to 1.1%, the lowest since 2004. Next on the positive news, we have the metal and the energy sector, which showed a where despite a broader market weakness, metal and energy sector posted a gain, with the Nifty metal up by 0.39% and the energy sector gaining 1%. The steel price climbed amid a rising output, while the power sector stock benefited from the improved demand outlook. Next, we will look into the negative news. There are two key negative news for today. One is the H-1B visa fee shock, and the second one is the broader market weakness. And on the first, we will look into the H-1B visa fee shock devastated the IT sector. US President Donald Trump imposed a massive $100,000 one-time fee on the new H-1B visa application, nearly 10 times the previous amount, which is $7,500 to $10,000. This policy change sent a shockwave through India's $283 billion IT industry. Indian IT company could face the additional cost of 150 to 550 million each based on their past visa sponsorship level. For context, TCS alone have about 7,000 H-1B approvals in financial year 23. And the stocks which got impacted by this news are Infosys, which is down by 5%, Tech Mahindra down by 3%, and TCS down by 2.96%, Wipro down by 2.11%, Infosys down by 1%, and the HCL had lost around 1.7%. The fee hike could reduce the EBITDA margin by 7 to 15% for the major IT firms. The Nifty IT crashed almost 3%, marking its worst performing sector. Analysts estimate that this could impact the core operating profit of the Indian giant significantly. Next negative news is the broader market weakness. Beyond IT sector, several other sectors also face the selling pressure, which includes pharma, which is down by 1.41%, and the FMCG mildly down by 0.5%, and the auto, which is also down by 0.4%. Mid-cap and small-cap indices underperformed, with the Nifty mid-cap falling 0.67% and the small-cap declining by around 1.17%. Next, we will look into the macroeconomy. First, on the macroeconomy, we will look into the US market. The US market on Friday, where Dow Jones increased by 0.37% and S&P 500 gained by 0.49% and the Nasdaq gained by 0.72%, driven by the tech giants. The Federal Reserve 25 basis point rate cut boosted the investor confidence on the US market. And on the Asian market, the Nike 225 increased by 1.5% after the Bank of Japan eased the ETF sale concern. And then increased by 0.8% amid the continued outflow. Next, we will look into the European market, where FTSE 100 provided a flat performance today. The mixed trading across the European indices, the tech gains are offsets by the automaker losses. Next, we will look into the key catalyst ahead. And today we have the two key catalysts which are ahead. One is the RBI Policy Decision, which is scheduled on October 1, and the second is the India-US trade talk. First, we will look into the RBI Policy Decision. The RBI Monetary Policy Committee meeting will be held on September 29 to 30, and the announcement will be on October 1st. The expectation is 25 basis point rate cut likely, with the inflation below 2% and the GST cut providing the further cushion for it. SBI expects this is the best possible option for the RBI, and this rate cut could provide a significant boost to the domestic market and the consumption. Next, we will look into the India-US trade talk. Trade Minister Piyush Goyal's Washington visit for advancing a long-pending trade deal. The positive resolution could offset some H-1B visa concerns. At last, I'd like to wrap up this video with the 3 key takeaway and the risk checklist. First, we will look into the 3 key takeaway for today. And the first one is the regulatory relief powers the Adani Group Rally. The second is the H-1B shock triggers the IT sell-off. And the third is the global easing cycle begins. First, we will look into the regulatory relief power the Adani Rally. SEBI clearance removed all major overhang under the Adani Group, and it adds 1.7 lakh crore to the group market cap. And on the second takeaway, we have the H-1B visa shock triggers the IT sell-off, whereas the $100,000 visa fee threatens the sector margin, and the Nifty IT crashed by 3%. Next, on the third, we have the global easing cycle begins. The Fed rate cut opened the door for the RBI policy accommodation in the October month, where we are expecting a 55 basis point rate cut. Next, we will look into the risk checklist. There are 4 lists that should be noted on your checklist, and the first one is the monitor the IT sector development, track the FII flow. Third is the global trade tension, and the fourth is the rupee weakness. First, we will check on the monitoring IT sector development. Watch for the client pass-through ability, and the second on the track FII flow. Foreign selling continues with the 10,962 crores outflow in September. And on the third, we have the global trade tension, the US-India negotiation critical for the market sentiment. Fourth one is the rupee weakness, where the currency pressure amid the dollar strength. Thanks for watching the video. If you found this briefing helpful, smash the like button, share it with a fellow investor, and don't forget to subscribe. I am always open to the feedback. Please provide your valuable feedback in the comments.